Welcome to The Deep Dive. We're the podcast that takes the complex world of earnings calls and makes sense of it for you.
Yep, cutting through the noise. Today, it's NorthWestern Energy, Q2 2025 results, and their whole strategic picture.
Exactly. We're looking at how this regional utility is dealing with, well, a lot. New big customers, new laws.
Yeah, and even a huge merger that popped up right after their call. Quite a bit to unpack.
Okay, let's dive right into the numbers. Yeah, that's always the first stop for talk tickers.
Right. So for Q2 2025, NorthWestern Energy posted GAAP diluted EPS of $0.35.
Which, that's down from 52 cents the year before.
It is, and non-GAAP diluted EPS, that came in at $0.40, also down from 53 cents last year.
But, and this is key, management said this was in line with expectations, even beat consensus slightly.
Yeah, that's the crucial context. Markets react to expectations. And the revenue side, well, that was a brighter story.
Definitely looked better.
Revenue hit $342.7 million. That's up a healthy 7.1% year over year. Also beat the street's estimates.
So, a mixed bag on earnings versus revenue, but the market seemed okay with it on the day.
Seemed to take it constructively, yeah.
And just quickly, for anyone tracking income, they declared the dividend, 66 cents per share.
Payable end of September 2025. Standard stuff there.
Okay, so those are the headlines. EPS pressure, but expected. Revenue growing. But like you said, there's a lot happening beneath the surface.
Absolutely. Let's get into the dynamics. What's actually driving these numbers?
Good question. Because that consolidated utility margin number, that jumped out at me.
Yeah, it was strong, up almost 10%, 9.9% to $267.4 million.
And what fueled that?
Primarily, it was getting rates recovered, getting paid for their investments across Montana, South Dakota, Nebraska. Both interim and final rates helped.
Plus transmission improvements playing a part too.
Exactly. That rate recovery piece is so fundamental for utilities, getting that cash flow locked in for the work they do.
Right. But obviously, something weighed on the bottom line, the EPS year over year. What were the main drags?
Well, a few things. You had some unfavorable weather, which always messes with demand a bit.
Always a factor.
Then there was new property tax legislation in Montana.
Yeah.
Management actually put a number on that, about a 5-cent hit.
Okay.
And finally, the PCM, the power cost adjustment mechanism, that was another 2-cent detriment.
So known headwinds mostly factored into that in-line expectation.
That seems to be the case, yeah.
How?
Allowed them to still edge past consensus despite the year-over-year drop.
All right, shifting gears to the future. What did they guide for the rest of 25? And, longer term.
So they kicked off their 2025 guidance, non-GAAP EPS. They're aiming for $3.53 to $3.65.
$3.53 to $3.65.
Yeah, and that's built on some assumptions, right? Particularly around that Montana rate review.
Very much so. They're currently booking revenue as if their settlement position gets approved. So there's a dependency there.
But they also stuck with their long-term targets.
They did. Reaffirmed 4-6% growth for both EPS and the rate base long-term. Shows underlying confidence, I think. In funding all this. Utilities always need capital. What's the plan there?
The plan for 2025 is $531 million in capital expenditures.
That's a decent chunk of change.
It is. And they highlighted that about 80% of that is going towards what they call non-controversial T&D investments.
Meaning the basic grid upgrades, reliability stuff.
Pretty much. The kind of spending regulators usually approve without too much fuss. It provides a solid base.
And their balance sheet. Liquidity looked okay.
It looked decent. About $318 million in liquidity at quarter end. And they said no new debt needed for 2025 beyond what they've already sorted out.
Good position to be in.
Yeah.
Now let's get to the really interesting strategic stuff. Those large load customers, especially data centers, that seems to be a huge focus.
Oh, absolutely. This is where a lot of the growth story potential lies. How fast can they actually bring these online?
So what's the latest?
Well, they just signed a third letter of intent, an LOI. This one's with Quantica Infrastructure.
That's big, right?
It's substantial. Over 500 megawatts for a potential data center development in Montana.
Wow. And that's on top of the existing LOIs with Atlas and SEI.
Correct. They're stacking them up. And management sounded pretty confident, said they expect at least one LOI to convert to a full energy service agreement, an ESA, by the October earnings call.
That would be a big step. Tangible progress. So how do they actually plan to serve all this demand? It's a lot of power.
The plan A is using state-regulated tariffs. They're targeting initial service around 2027, maybe some smaller bits in 2026.
And if the state approvals take too long?
They mentioned they have flexibility. They could potentially go the FERC route, federal regulation, if needed. They want to make it happen.
Interesting. And they're even exploring helping data centers build their own generation.
Yeah, this build-own-transfer idea, where NorthWestern could potentially end up owning generation assets built initially by the data centers themselves. It's a creative way to potentially add generation.
Definitely one to watch. Okay, besides new customers, what about their existing power sources? The Colstrip plant ownership increase seemed significant.
Hugely significant. It's all about resource adequacy, making sure they have enough power.
Especially with those data centers potentially coming online.
Exactly. So by January 1st, 2026, after buying more stakes from Avista and Puget, NorthWestern will own 55% of Colstrip.
Going from short capacity to long.
Precisely. Puts them in a much better position to serve existing customers and meet that new large load demand. Management even argued this move helped keep the plant viable.
And they see it as an energy hub.
Yeah, they're talking about potentially exploring even more capacity there. It's a core asset for them now. And they plan to file for cost recovery on the Avista part soon, in Q3.
And also on the acquisition front, they closed the Energy West and cut bank gas deal.
Right, that happened July 1st, added about 33,000 mostly gas customers plus employees. Gives them immediate scale in those areas.
Lots of moving parts. Let's talk regulation and legislation. Utilities live and die by this stuff. Any big wins lately?
2 really significant wins in Montana, actually. Real tailwinds for them.
Okay, what are they?
First is Montana Wildfire Law 490. This is huge for risk management. It basically limits their strict liability for wildfires.
How so?
Once their wildfire mitigation plan gets approved, they'd operate under a negligence standard, meaning if there's a fire, the burden shifts to the plaintiff to prove NWE didn't follow its approved plan reasonably.
Ah, so it's not automatic liability if something happens near their equipment, assuming they followed their plan. That significantly lowers the financial risk, right?
Massively. Reduces that tail risk investors worry about, especially with wildfires being such a concern out west.
That makes sense. And the second legislative win.
That was Senate Bill 301, the transmission bill. It streamlines the approval process, the CPCN, for big regional transmission projects.
Making it easier to build necessary power lines.
Yeah, gives them more certainty for deploying capital prudently on large projects, like that Grid United North Plains connector they're involved with. Really helpful for getting infrastructure built.
Got it. And the ongoing Montana rate review, where does that stand?
The gas side is fully settled. Done deal. The electric case is mostly settled, but there are still a few contested bits, mainly around cost recovery for the Yellowstone plant and the PCM base.
And when do we get a final decision?
Expected in the fourth quarter of 2025. Importantly, it'll be retroactive back to May 23rd.
So results are pending, but the impact will eventually cover the period from May onwards.
That's the idea. Mitigate some of the waiting game uncertainty.
Okay, so the earnings call covered all that. But then after the call came the really big news.
Right. The merger announcement, August 19th. NorthWestern Energy and Black Hills.
An all-stock deal. What are the terms again?
It's 0.98 Black Hills shares for each NorthWestern Energy share. Creates a combined company with an enterprise value around $15.4 billion.
That is a game changer. It completely reframes their whole multi-year outlook, doesn't it? Assuming it gets approved.
Absolutely. It brings scale, diversification, potentially changes their growth targets. It's a massive strategic pivot.
What do you think the main strategic driver is?
Yeah.
Just getting bigger? Or is it about combining different strengths?
Probably a mix. You get geographic diversification, less reliance on just Montana or South Dakota regulation. Black Hills has a strong gas utility business, potential for cost savings, shared expertise.
So the pitch to investors and regulators is likely a stronger, more resilient, maybe more efficient combined utility.
That's certainly how they'll frame it. A broader footprint, potentially more consistent earnings and dividend growth. But yeah, regulatory approvals are the big hurdle now.
Okay, bringing it all together for investors.
Yeah.
What's the takeaway here? What's the value proposition NorthWestern is trying to sell?
Look, management's pretty clear. They're pointing to a solid dividend yield, around 5% currently.
Which is attractive in the utility space.
Combine that with their standing 4-6% long-term EPS growth target. That gets you to a potential 9-11% total return.
And then the potential upside.
Exactly. The data centers, transmission projects, those are potential kickers on top of that base return. And now the merger adds another layer of potential transformation and synergy if it goes through.
How's NWE stock actually performed compared to the rest of the utility sector recently?
Well, utilities generally lagged the market earlier this year, but had a decent rally until late summer. NorthWestern's actually shown some relative strength lately.
Oh, yeah.
Yeah, over the 3 months since the call, NWE stock was up about 8.3%. Compare that to the main utilities ETF, XLU, which was up around 3.6%.
So some outperformance there. Investors are clearly watching interest rates, like always for utilities.
And crucially, that acceleration in data center demand. That's a huge theme for the whole sector, and NWE seems positioned to capture some of it.
So looking ahead, what are the absolute key things investors need to keep an eye on? The major catalysts.
Okay, number one, the final decision in that Montana rate review in Q4, especially any retroactive impact. That's direct earnings impact.
Right.
Number two, progress on those data center LOIs. Getting one converted to a signed ESA by the next call, like management hopes, would be big validation.
Proof of concept.
Yeah. Exactly. Third, getting that wildfire mitigation plan filed and approved under the new Montana law. That de-risks the story.
Lower tail risk, yeah.
Fourth, milestones on transmission projects. And finally, maybe the biggest one, the whole regulatory process for the Black Hills merger. That will dominate the narrative.
Makes sense.
Yay.
Okay, it's time for our not financial advice segment. Outrageous but plausible trade ideas, just to get you thinking.
All right. So you've got NorthWestern Energy, right? Big data center pipeline, but also this massive merger with Black Hills hanging over it.
Yeah.
Here's a thought. Go long a basket of other regional utilities, specifically ones that also have significant data center exposure but aren't currently involved in a major merger.
Okay, so long the peers benefiting from the data center boom and the twist.
Pair that with a short position on NorthWestern Energy itself.
Short NWE. Why?
The logic is this. NWE has great potential catalysts, yes, but that Black Hills merger introduces a big chunk of uncertainty and a potentially long, drawn-out regulatory approval process.
Which could weigh on the stock in the near to medium term.
Could do, relative to peers who just have the clean data center growth story without the merger integration risks and regulatory overhang. So you're betting on the sector's data center theme broadly, while hedging against NWE potentially lagging in the short term due to the specific merger complexities.
Interesting. A bet on the theme, hedged against deal friction. Plausible. Definitely outrageous. Okay, let's wrap this up.
So that's the deep dive on NorthWestern Energy's Q2. A quarter that met expectations despite some pressures, but really highlighted a company in major strategic motion.
Yeah, from boosting their stake in Colstrip for capacity, really pushing hard on the data center front, getting those legislative wins in Montana.
And then layering on a transformative merger proposal with Black Hills, they are actively shaping their future.
We hope this breakdown gave you some solid insights into where NorthWestern Energy stands and where it might be headed. But remember,
this is absolutely not financial advice. Always do your own homework, consider different views.
So what do you think? Are the data centers the main story? Or is it all about the merger now? Let us know what you'd like us to dive into next time.
Thanks for tuning in.
We'll catch you on the next deep dive.